What is going on, Alpha Hunters? Hopefully, you are having a terrific Thursday. It's also a Fed Fallout Thursday. As we got the post trading day of the FOMC meeting, rate hikes, and some other things. So, we're going to go through some of that and kind of give you what the market was reacting to yesterday, and then what it's looking like today. So yesterday we know it was a pretty quiet day. Then we got to the Fed day, interest rate decision. They held rates, but the reason why the market was pretty bullish there in the first 30 minutes, especially there initially, is because the dot plot came out. And let's see if there's the headline on Finance Yahoo yesterday when we got that interest rate decision was really more of the Fed is now expecting to cut rates 3 times next year, and that was what the market held up very nicely for. Then we got to the press conference yesterday, and really Jerome Powell didn't say anything too crazy, anything that we kind of didn't know already in the marketplace, and the market just kind of took that as, yeah, we know more than you, Fed, and just kept trading higher. A little bit of a pullback there when he, towards the end of his press conference, and nice little rally to end the day. Today, nice gap up. You kind of figured we were going to follow through. I mean, we had a hugely bullish day yesterday. So today, get a nice gap up, roughly 0.4%. Kind of choppy here, pulling back a little bit. Makes sense. We had an extremely bullish day yesterday. Pulled back there for about 2 hours. A little bit of a run here into the midday, and then we just kind of dropped. Came down, made a new daily low, got negative there for about 15 15 minutes here recently. But I think the more interesting areas are Qs and IWM. So here's the Qs, and what's really kind of interesting here is the Qs were sluggish yesterday. They were sluggish going into the Fed announcement, and even after the Fed announcement yesterday, you can see like they everything went bullish. I'm not going to say the Qs didn't go bullish, but it wasn't nearly as strong as some other areas. We'll definitely look at the IWM. Crazy moves there on IWM yesterday and today. But yeah, nice gap up here today, but it got quickly negative here, even in the first hour, and even about an hour ago when we started dropping here on the market, the Qs are down 0.5%. So, you can see the big areas of the market, right? AAPL, Microsoft, Alphabet, Meta, Amazon. They're all down pretty good. Nvidia down pretty good. The one, if you want to say big tech areas, TSLA, right? And we'll get into a little bit of that a little later, but that has a lot to do with more of interest rates dropping off as much for Tesla, but big tech area not doing all that well here recently. We saw them kind of pause for about 3 weeks, and so just kind of continued to pop a little bit yesterday. IWM though, let's talk about this. Man, this thing was negative 0.6% about 10-15 minutes before we got the Fed interest rate decision yesterday, and then this thing, woo, look at this move. We went up like 4% in the last 2 hours of the day. Damn. Like all I can say. Damn. I don't even know how to spell that, but man, that is a huge move. A lot of that had to do with the expectation now of interest rates being cut, or Fed cutting funds rates next year 3 times. They had never mentioned that before, and that was a big deal. They had never mentioned that before. That was never really kind of a message they had been conveying before, or at least from Jerome Powell in his press conferences. So the fact that they kind of that they admitted that as a collective and stuff, that was kind of a big deal. Nice gap up here today, huge monster gap up, a little bit over 2%, I believe, about 2%, a little bit over 1.5%, a little bit over 1.5%, about 1.7%. Nice pump, kind of sideways from the open. though right now, up 2% currently. Like huge moves. We'll take a look at those daily charts because they're massive. IW or not the IWM, the DIA looked like it got a little bit positive here. A little bit of a gap up here, about 0.3%. Actually got negative briefly about 10 minutes ago. It looks like it didn't last all that long. RSP also had a very strong move yesterday and today. Nice little gap up today, about 0.9%. So yeah, a lot of those things on the RSP, IWM, kind of been talking about over the past couple of months. Like those are the areas you want to start getting into. Definitely seeing strong flows into those areas now. Definitely want to reduce that exposure to the Qs, and it's probably one that's going to last a while. Take a look at that daily. Check this out on the RSP. I was looking at this morning as we made some pretty monster moves. Look at that much volume's coming in today. Why is there so much volume coming in today? Well, this is the highest point that we've reached going all the way back to April of 2022. We took out the high that we put in back in February and July on that gap up today. So, yeah, huge amount of volume coming in today. Those are the areas you want to be in. You want to be in the other 98% of the S&P 500. You don't want to be in that 2%. That 2% of the big tech stuff. You don't want to kind of stay away from there. But looking pretty good there, at least on the RSP. The DIA, I believe, is hitting all-time highs. Yeah, the DIA is hitting all-time highs yesterday, closing all-time high yesterday. So, yeah, just taking a look, stepping back. Whew. Monster move there yesterday. Corey, what's going on, brother? Coming down from the highs of today, obviously, but, man, it's just a huge move. And yeah, there you go. The DIA, IWM here. Look at this monster move yesterday. So huge move. We were up officially 3.4%. It did make that move 4% in the last 2 hours following the Fed interest rate decision. It did hit a high today that does go back all the way to August of 2022. So we've now taken out the highs of this year. It doesn't look like we're going to hold that as the IWM has come down from those highs today. But huge, I mean, just a massive move yesterday. And on top of that, following that, like massive gap today. The Qs, okay. So this is that like consolidation for about 3 weeks that we kind of had. Really before we got to this week, right? We got that breakout this week. It's just kind of been leading higher. And we haven't quite made it to all-time highs. Do we probably make it to all-time highs before we reverse lower? I kind of think we do. I kind of do think we will. I mean, you can see. I mean, we've been breaking out higher. We're not far from that all-time high area. I mean, we got to within 0.5%, really, 0.6% at today's high. If we go from our current market price, it'd be like a 1.75% move higher. So yeah, I mean we're not too far from there. Are we going to trickle higher? Yeah, most likely we will. But at that point in time, maybe not. Continue with a breakout there on the Qs. The SPY. Where are we at on the SPYs? Because we definitely made some breakouts this week. So SPYs definitely made a move yesterday. Got up into that 470 area, and that's where we had these tops right before we had the all-time high top around 480. We have these tops here. November of 21, December of 21, even January of 22, right there around 470. So somewhere there between 470, 473, and that's kind of where we did top out today. Kind of an interesting spot because it is just short of that all-time highs. And, I mean, I guess the official all-time high would be up around, let me go, let me just do this here on the SPY, which SPY intraday all-time high is 479.98. So it's 2 pennies short of 480. And that's kind of where we're going to be getting to. So we're going to quickly run through some things. And I'm going to take it a little bit. I kind of want to look a little deeper at AAPL today. So we got VIX VIX bouncing. Look at that move on the VIX. Wow, nice bounce there on the VIX. Does that kind of course? Yeah, it kind of corresponds when we saw the market kind of selling off there a little bit over an hour ago. Okay. DXY, the dollar dropping off yesterday. Kind of mentioned this yesterday before this move happened when we got on quickly before the Fed talk. It just, if we got below these wicks here, it's going to continue lower, and you've seen that rapidly break down. So, yeah, I don't know what to do here with the dollar though. I don't know what to do here for the dollar because we're going to get into a major support level here, and I don't see much reason now that the Fed has even admitted that they might cut interest rates next year 3 times, or the Fed funds rate. I don't. There's not much reason to be looking for shocks in the bullish direction now. So I think that was a pretty good shock yesterday. Like, they hadn't mentioned any amount of Fed cuts for the next year before yesterday, and then yesterday it says, "Oh yeah, we're looking at maybe 3 Fed cuts." Oh, okay, that's interesting. Y'all never made that statement before, and you see GLD. I was kind of wondering what GLD was going to do if the dollar did drop off. Yeah, you can see it. That was a great spot to be getting in bullish, mostly because we kind of pointed this out. Very nice, 62% retracement level was right into that spot. So yeah, made sense. That was probably a good spot to be looking to be bullish on the gold. And even if that was a quick pop and we kind of wind up coming back down, like, I wouldn't be leveraged super bullish on gold, but I would be a little bit more aggressive on being bullish on gold. Any major support and resistance level you spot on the way down if it does pull back. But that was a pretty good spot to be bullish. 10-year yield. Okay, so the yields look very much like the DXY, dropping off pretty good. Not much to say here. just very sharp breakdown. We actually did get into this high here back in December of last year. So, okay, that's all I got. I wouldn't know how to play this with bonds, honestly. Like, this is a pretty massive move in yields, and I could definitely start to see this thing kind of consolidate a lot more here, because this has already been a pretty extended move here over the past month and a half. 10 and 2 inversion, nice pop yesterday on the 10 and 2 inversion, but kind of resting a little bit today. The 2-year not dropping off as much today, or you can see at least bouncing back compared to that 10-year. Where did the 2-year get? 2-year got kind of into this little high spot back in April. Okay, maybe we're just in a really long term, maybe kind of consolidation area, and with rates, maybe we kind of bounce around that 3, maybe 3.8 to 3.6 to all the way up to maybe like 4.0, or not 4.0, sorry, 5.50 to 5.2. Maybe we're just going to be kind of range bound in there for a little while. That'd be interesting to kind of see how that sets up, if that winds up happening. HYG, but yeah, obviously you can see we're just kind of in the middle there on that 2-year yield. HYG, huge move here, all the way up to this kind of support and resistance zone. Haven't broke through yet. Obviously, this is going to be a pretty important level. That's kind of the high that we hit back in the earlier parts of the year. Yeah, earlier parts of the year. That's all I got. I wouldn't want to be bullish right here. I would want to see a couple of days what happens. I want to see a couple of days of what happens. Yeah, I would not want to be bullish right there. Even if you were bullish, maybe back down in some of these lower areas on these monster gap ups that look like they were pretty strong change of directions. Like, this is a pretty good spot to probably take it off and see what would be the next setup. LQD, kind of the same thing, making a new high. Well, a new high, at least going all the way back to January, early February here. Definitely took out that March or early April high on the LQD. How's the TLT reacting? TLT got to moving a little bit today. So we're about to get into this kind of important area right here. We got a lot of bounces here previously in the year. And then we had that huge breakdown in August. And that was when, we really started seeing issues with bonds. This is when the TLT started really breaking down. Kind of coming into that spot, is this just a massive retest before it continues lower? It's going to be real interesting. Obviously, we're throwing an upper wick into that area. So, like I said, bonds have moved pretty strong. We've had pretty strong moves on yields. I would be a little bit more cautious about being bullish right now, and I would just wait. Want to see, do they break out? If they do, you want to take it on the retest, and that kind of goes for any one of those bonds, or do they just kind of retest and now they set up maybe consolidation, and then they push higher later? That you'd want to take on a breakout. Okay, so I'd say you just kind of want to wait. You don't want to be aggressive here. They've already moved quite a bit, especially over the past month and a half. A lot of things very much look like that. So let's take a look at that sector rotation. All right, so we know I'm gonna look at sector rotation for the. I tell you what, we're gonna look at sector rotation a couple different ways. We'll look at it from obviously the performance from yesterday, just before we got the Fed interest rate decision, and you can see what's leading. Real estate. Look at that move on real estate. I was talking to the buddy this morning. He said, yeah, his REIT was up like 10%. I believe the REIT he was in was up 10% today. So he was just like, yeah, I'm taking the profits. I ain't seen that move ever on the REIT. Yeah, that looks. I mean, that's a monster move, and this kind of goes back to, some comments. I don't know what rates have, what level REITs are at now, but I was kind of mentioning that over the, a couple months back, like back in October when REITs really were dropping off. I was like, you want to be buying REITs, man. REITs getting that cheap is crazy opportunistic, crazy. Anyways, REIT's doing really well today. Energies, very strong. Materials, very strong. XLY, looking pretty good there. Industrials looking good. Financials also outperforming. Yeah, financials had a very strong pop yesterday. You can kind of see that purple line even yesterday. Very, very strong. Utilities were very strong yesterday. Look at that move on utilities up to close out the day. Even kind of strong this morning, but kind of looks like they faded quite a bit during the day today. So utilities a little bit outperforming there. XLC, communications area, underperforming. Healthcare, underperforming. Tech, underperforming. Staples, underperforming. So discretionary is one of the things that's probably helping discretionaries, rather compared to XLC, XLK, on the big tech area. It's probably a lot to do with Tesla, and they've mentioned before, and especially in their past earnings call, that they are seeing real issues with interest rates on consumer purchasing power on interest rates, which makes sense. You buy cars with interest rates or with loans, so obviously interest rates are going to be a big deal as far as buying cars. So since yesterday's close, what have we seen? Real estate's bouncing pretty good, continuing to bounce higher. Energy's also up there leading the day. Materials doing pretty good. Industrials, discretionaries, financials also outperforming on the day. Underperformers, communications, tech, healthcare, utilities, and staples. Interesting. So the risk-off area sectors are actually underperforming the most, even though they did do pretty good yesterday after that interest rate decision. Okay, so yeah, makes sense. XLU kind of was noticing that, had a nice gap up, but they've faded throughout the day, so it makes sense that they're kind of the biggest underperformer there. We also got Staples underperforming, healthcare, tech underperforming there, in line with the market. XLC, XLY, so communications and discretionaries under kind of in line there with the market. We got financials, industrials, materials, real estate outperforming. Biggest outperformer on the intraday. Energies. Energies, the biggest outperformer. Okay. So there's that rundown. That was a quick one. Let me get caught up in chat. And we'll see what's kind of going on. Crazy markets lately? Yeah, crazy day. Black Beauty said, mess of a day. Sabak said, too slow on stocks. Gary, you did okay? Good. Okay is better than bad. Neutral, Judah, the world above. Tesla stalled. Let's take a look at Tesla real quick. So yeah, Tesla huge bounce there. They were looking kind of bad yesterday before the interest rate decision. Obviously, they're really helping out yields here on TSLA. And GCART, yes, the dollar. Yeah, the dollar. Whew. What a breakdown there on the DXY. But yeah, Tesla. I mean, if you just look at that consumer durables area, I mean, Tesla, DHI, Ford, G. Look at these. Like home builders are up massively, and that's the thing is home builders have already been on a strong run. Lenore, look at this move it's already had, and like it breaking up 6%. Like I would absolutely sell that. Not bearish. I'm not talking about bearish. I would absolutely, like if you've been bullish, I would absolutely close that. Look at that move. That is a monster. That is a monster move. That's like a bottom. That's like a bottoming move. I didn't realize real estate was doing that well, or home builders were doing that well, because there was a headline a couple days ago. It was definitely this week about construction hiring was really slow, really slow. But yeah, you can just see Lenore, man. Just they're not the only ones. What are some other ones? PHM. Look at that, same kind of deal. Like why have these guys been just absolutely crushing it before this interest rate decision? Like I'm talking about like previously, earlier in the year. They've been doing really good. And then all of a sudden now they're just even better. I don't know. Interesting. I wouldn't want to be exposed to that. Ford. So Ford makes sense, right? Ford makes sense. It's been a bottom. This is like bottom feeding. Excuse me, I got the hiccups. This is like bottom feeding, right? Those are typically the moves you see at the bottoms, or the tops. But man, this makes sense. Strong move off the bottom, short covering, opportunistic buying, all of it. All of it happens. And it's typically very violent moves off the bottom. That's typically what you see. GM. Yeah, GM's up 6%. But for home builders, like Lenore, man, I mean, this isn't bottom feeding. This is like all time highs. This is like there are people who are going to be selling the hell out of this move. And the fact they got earnings today, yeah, I don't think I would want to be bullish. If this thing gaps up tomorrow, if you want a trade idea, I don't trade in the morning because I like to sleep. But in the morning, if this thing gaps up at all, I would just fade that. I would fade that so hard. Super fade that. DHI. I mean, same thing here. It's just crazy how those discretionaries look, and that's not even Tesla. That's not even looking at Tesla. It's just crazy. How about Amazon? Let's run through the rest of the big tech. Amazon, look at that move. Wow. So Amazon's down 1.25%. Oh man. Okay, Amazon, Microsoft. Microsoft's down 2.25. Microsoft gap down. Rrr. Ooh. Do- Actually, Microsoft looked kind of bearish there yesterday afternoon. Look at that move. Because there was the interest rate decision. Definitely didn't continue up with the rest of the market. Oh man. Microsoft. Okay. AAPL. Um, AAPL definitely not nearly as bad as Microsoft, but struggle busting a little bit. Made a new 52-week high today. Yeah, made a new 52-week high today. So made a new all-time high today. AAPL. There you go. Looking pretty good. I absolutely would not buy Apple with your money. Alphabet. Yeah, Alphabet's been having a hard time, hard go recently. Even today, it's down 1%. Meta, yeah, big tech, man, just getting hit. Meta's down 8.8%. Kind of rough there. Okay, these guys. How's Nvidia doing? Nvidia's down 0.25%. At least they gapped up. Microsoft didn't even gap up. Microsoft just gapped down, just kept trading down, man. Let me know if there's anything you guys want to take a look at. Anything that has moved astronomically more than housing, because that is crazy. Cat, Deere, industrials. Yep, makes sense. You buy industrial equipment with loans. Yep. So Cat, obviously interest rate sensitive type stock. They're looking pretty good. Deere. Also, Deere looking pretty good, up 3%. Oh man, that thing moved real strong yesterday. Look at that move on Deere, man. Dang. Yeah, yesterday they got bought up. Yeah, banks are doing really well. Let's go run through some banks real quick. J.P. Morgan, they've been on a run. They're continuing that run. Goldman Sachs up over 5.5%. That is a huge move. Goldman is looking pretty good. Bank of America, Wells Fargo. Man, all these banks are just looking so good. I mean, up over 6% on a lot of these banks. That's crazy. Morgan Stanley, BlackRock up 4%. Blackstone up 6.25%. Damn. Inflation's coming back, baby. I mean, just look at tech. Oracle, Adobe, Netflix, Palo Alto. Is that Palo Alto? Yeah, Palo Alto. And obviously the big tech guys. It's just crazy out there. Or ORCL, which I think they had earnings this week. Yes, they did. Nice gap down on Oracle for earnings. And then Adobe. Adobe also had earnings yesterday. That might be why a lot of tech stuff's getting hit. So, I mean, dude, that just doesn't bode well for tech. You had Oracle and Adobe on back to back, almost back to back days. You know, obviously not look good on earnings. Netflix is just traded down. They actually opened flat. Okay. PANW, Palo Alto Networks, huge bearish engulfing candle. Wow, down 4%. So, all right. Apple. Let's take a look here. I don't want to do this. APL. Apple iPhone growth. Dude, I don't care about growth stage. I want Apple growth. Apple statistics? I'm curious. What do you got? Apple. What the heck? Apple revenue increased dramatically in the 2010s from, yep, all that. Yep. Yep. Apple revenue by region. Apple revenue by product category. Services continues to grow. That's the big one, man. That's the big one. All right. Apple iPhone revenue. Where's your statistics? iPhone sales. There we go. So the reason why I'm interested in iPhone sales is because I have a theory that people buy iPhones, they come into the ecosystem, and if you're not really seeing sales, like iPhone active iPhone units continues to grow. I don't care about unit. iPad quarterly. I don't care about iPad. So the thing that I'd be more willing to say, I wouldn't want to be bullish on AAPL since they really haven't grown iPhone sales in the past 7 years. And that's what's interesting. So, okay. So that's one piece of the puzzle I wanted to know. Active iPhone units. I wonder why they've. I'm sorry, I'm trying to think. Dude, I don't care for your cookies, man. Consumer electronics. So what I would want to know, which I guess I could calculate myself, is revenue per. Black Beauty said all the moves are done. Okay, we dumping now? Are we dumping? Is that what it's time to do? It's time to sell and go bearish? What I want to know is in regards to AAPL, and I could calculate this myself, is I want to know really revenue. Damn. I guess I could take total revenue because I don't even think there are other business units. Where's that breakdown? Did I just see it and go past it? What I want to know, yeah, I mean, iPad, the Mac, other hardware. So all that's like a nothing burger. Like that's nothing. So I would just take the total revenue. All right. So I'm gonna do that. I'm gonna open an Excel. I'm gonna have some fun. I'm gonna have some fun here. Just let me do this. It's my fun time. What I want to see is the incremental phone revenue Apple brings in. I want to see how much that's really dropped off because my guess, I don't look at this. I don't care to really get into fundamental analysis this much, but this is one that I do think it has probably dropped off quite significantly, and one that I would imagine could be rather an issue going forward. The heck? Give me. Thank you. Alright, so iPhone revenue. I'll take this. I don't think I need this data. Copy. Man, I'm so glad someone keeps such good statistics on AAPL. Okay. I should have done that there too. It's alright. And then I want sales. Oh, did I take the wrong thing? Oh, iPhone revenue, iPhone sales. This is really what I wanted. iPhone sales. Okay, so there's that. That's what I really wanted. And then I want active phones. This would be a good one. So okay, so let me do this. APL tote rev iPhone rev iPhone sales and active units. Okay. So that works. Let me blow this up a little bit. I don't know if we're going to blow it up too much because I'm going to do some stuff off to the right here. Okay. Okay. So what I want to do is line these up. Perfect. Okay. So that. Close that down. Close that down because I'm going to get rid of this column. I have no idea what this is going to give us, but we're going to find out. And what I want to freaking know is how much they make per revenue or revenue per phone, right? We want to make revenue per phone. Which that's in billion, that's in millions. Okay, so I'm gonna need to I do wanna adjust that ever so slightly. So that's times times, there you go, million, and then where's times, there's billion. I think you're just gonna have to trust me on that. Why did that? Oh, because I put the parentheses in the wrong spot over here. There we go. Okay. So that's perfect. I can at least copy that and move it around. So this is going to be rev per iPhone. Yeah, services have started to take over. Okay. That's not really telling me the whole picture. So revenue per iPhone, actually, let's do this. Interesting. Revenue per iPhone, and then rev per, what the heck? Active unit. All right. So go back to that. Go to that. Okay, so that's kind of what I thought it would probably look like. And then what I'm going to do is this. I'm going to move that over. And then this back there. All right. So this is rev. iPhone. Rev per yeah, that's how I want to do it. iPhone rev per active unit. Okay. All right. Let me make sure that is not set up right. That is set up right. Oh, is that set up right? iPhone rev. Yeah. This is not. Oh, hold on. No, that was set up right. That was set up right. Yeah. Yeah. Okay. So iPhone Rev. So this makes sense, right? This is going higher throughout time. iPhones have gotten more expensive, so this makes sense, right? Throughout, so that number jives. I definitely dig and understand that trend 1,000%. iPhone Rev per active unit. So this is the part where it gets a little distorted because what you are trying to kind of figure out is how much, and even this is kind of telling the same story, is how much incremental revenue you are going to get per handset per iPhone that gets sold, and you can see how much it's really, really dropped off. And this is kind of what I've been saying about I don't see the growth areas for AAPL because I don't know how they're going to continue to grow the company. And obviously, the big one that they have coming, or the big product that they do have coming, is the Vision Pro. They their VR headset, and I just don't I just don't know how that's going to really uh, work. Me, I don't need a chart title. Let me. There we go. So the revenue per iPhone total. This is the blue line total revenue per iPhone makes sense. I mean, revenues are going up. iPhones are getting more expensive, so it makes sense. Even the gray line, you see the gradual uptick throughout the history, especially here over the past like few years. That makes sense. And down here is the years. It actually starts at 2008, goes to 2022, I believe. It's these two. These are the ones that there's not much growth. There's like no growth. And I guess let me do this. Move chart, new sheet. I can do that to chart one. That's fine. That way I can stay here. Because the other part that you want to know is your growth. So iPhone, iPhone Rev growth. iPhone active growth. So that dog, man. So you want to take that. Hold on. I'm thinking. So I'm not gonna like this first answer at all, but we'll see what the rest of it gives us. That minus that. That. That first number might be okay. Perfect, right? iPhone Rev per active unit. Yeah, that's exactly what I'm gonna do. So now see what that looks like. Select move chart, new sheet, boom. What I'm going to do, format, select data type, there we go. Oh, no. Where is it? Format axis. I want to get rid of these first couple because they distort the chart here so much. Screw that. I got it. I'm going to do it the easy way. Shaboop. There we go. Okay, so this... Alright, so they definitely kind of are... Man, it's just... They don't really have a great growth. Like per iPhone, like revenue per iPhone growth and even active handsets. Like it's just kind of all over the place. It looks like it trends up, but it's just kind of just bounces all over the place. This is mostly because services has been has become more of a revenue stream for them, that this has trended high, that this, you can see it has trended higher over the past 10 years, but it's still not like crazy. Like I would want to see this like higher, like more positive, and it's really not. It has been positive, or at least 0 to positive, I would say, here over the past like kind of like 3 years. Past 3 years. But that's, I don't know. I just don't like that. And basically what I'm trying to do with this exercise is figure out for each iPhone that gets sold how much revenue is going to come in. And I don't really see like a great deal of growth. Because you take that into account, and then you take this one into account, and this is, your revenue per active unit, and they're just kind of, iPhone revenue per active unit. So both of these kind of tell you like it's pretty stagnant, and so that makes sense because this is what I was trying to figure out with that growth number, and you can see, yeah, it's pretty stagnant. It's around the 0 line. There's not much growth there. It was really just back here where there was a huge distortion. I had to delete some of that data. Anyways, I'm gonna keep this because I might come back to this, make another video about it. Anyways, Alpha Hunters, let me know if there's anything you quickly want to look at. I'll be pretty honest, man. I would just stay away from big tech, especially AAPL. I just don't see them in the major growth areas going forward for big tech, and that's kind of one reason why I wanted to look at that. Another thing I wanted to quickly look at is I want to see how's this kind of working. Oh my gosh, it's so zoomed out. Let me do this. Yeah. So I mean, this is going to probably play out over years. IWM outperformance over the Qs. Yep, that's going to be a fun one to watch. Anyways, Alpha Hunters, y'all have a great rest of your day. Take care, and we'll see how the market wraps up the week. Do we get to all-time highs tomorrow? Doubt it. Don't expect it. But it is, crazy strong moves this week. Crazy strong moves. Those home builders are rocking and rolling today. So, Alpha Hunters, have a great rest of your day. Take care.